Hey brother, can you spare 100 billion plus euros for Spain? Hello Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your midday market update for Monday the 25th of June. Let's get serious. Spain is the fourth largest economy in Europe, and here it is asking for 100 plus billion euros to bail out the banks. That's got me really concerned. I don't believe the politicians have the answer, and if they do have the answer, they can't stay in office. All politicians have done during the last 2.5 years of this problem is kick the can down the road, and there's no indication that's going to change anytime soon. I mean, just look at Greece, a small economy compared to Spain, but here you have the Prime Minister and his finance minister suddenly ill and not able to attend what is now the 14th summit on this problem. What does that mean? It's a delaying tactic, and once again, they're kicking the can down the road. No politician wants to face the inevitable, and that is there's going to have to be a lot of pain and some major haircuts involved. It's impossible to avoid that. If you didn't see my video this past weekend on the S&P 500, I strongly recommend that you watch it and see the conclusions. There's an amazing recurring pattern in that, so check it out. But first, let's get started. We're going to be looking at the S&P 500, and as you can see quite clearly, we had a big down day on Thursday. We also called this a little wussy rally. Didn't really do anything. And of course, today, boom, we're down dramatically. And we've done something a little bit different, which I want to share with you. We've tweaked our tool, the parabolic, right here. Now, the interesting thing about parabolic is you do have the classic settings, which is right here, 2 and 2, and you can see how that changes things. Even then, you would have basically hit the parabolic on this particular item. However, having said that, when you tweak it, you can actually get a really nice rhythm on this. I'm going to move this right here. Now watch the dots on your screen. So I move this like this to up to 8. There it is. And you can see how this catches some nice moves right here. Boom. Down, little buy there, a little bump up, down again. There's the signal right there, nice up, and now a down. So we talked last week about the market being negative and this Thursday move not to be missed. And of course, here it is, we're under a lot of pressure. I think the market's going to continue under pressure, and I urge you to take a look at that video we talked about and draw some interesting conclusions about where this market could possibly go. Because this is, you can look at earnings, you can say, yes, this is good. There's a different feel in the market here. And this is all about, the markets are all about perception, about what's being done and what's not being done, and that's the biggest asset, or the biggest fundamental factor right now is the perception of the market. But first, quick message. If you haven't called us yet on a free consultation and a free phone call on our personal one-on-one Market Club coaching, give us a call. There's no time in, I think, recent history is it more important to have someone by your side to help you through these markets. In the next 9 months is going to be really, really difficult, and I think there are going to be some great opportunities, and you really have to have, I think, if you're starting out, you need some help, a one-on-one coach. Give us a call. We'll tell you all about it, how the program works, how you can benefit from it. So the call is free, and the consultation is free. So it's 877-219-1482. Now let's get back to the markets. We've looked at the S&P 500. We think it's going to go lower. Obviously, the 1270 level takes it unchanged for the year, and that would not be a particularly good sign in my humble opinion. But let's go back to a couple of markets. The Dow, pretty much the same pattern there. Again, on the NASDAQ, all the equity markets are longer-term negative based on our monthly trade triangle, which is right here. So let's see how that plays out. But looking at the silver market, which is interesting today because we had a sort of a very short-term up move, and I think that's more short covering as opposed to a new buying. I think we've obviously 27.55. We felt the 27 level right here. You can see we scoped this out last week. The 27 level right here was going to be some sort of form of support. And yes, we did dip below that briefly, and we've come right back up. So I think for the most part, this market is going to maybe continue to build a base, but the overall trend right here, minus 90, is for a continuation of the downtrend in silver. So let's go to our next market. The next market we're going to be looking at, of course, is gold. And gold, unlike silver, did not make a new low. You can see it's sort of like really in a really broad trading range. And you can say that trading range really starts from this level on the top, 1640, to the downside, which I think is probably right around here, around the 1540 area. So again, we were oversold a little bit. We've come back up. I don't think the market's out of the woods yet. You can see our score is minus 65, and what that indicates is a trading range. And with trading ranges, you probably want to use the indicator, the Williams percent R indicator. Once it gets up towards this level, you probably want to look for some other indicators to get short, because we are stuck in this trading range. If we clear this on the upside, great. If we clear it on the downside, you'll also get a continuing move in that direction. So let's just clear the screen, go to our next market. In the next market we're going to be looking at, of course, is going to be copper. And there's really not much to say about copper. It's sort of flattened out here for pretty much all of June. We got up to the 345 level. We've gone down to the 325 level, and really no strong trend there in the short term. Longer term, we are still negative. The score is minus 100, indicating the trend is down in this particular commodity. So let's go to crude oil, which is, of course, a bigger market. And you can see crude oil is not acting well at all. We had the little pop there, looks like on Friday, and that was more than anything, that was a short covering rally. And then we've come right back down again. Part of that was probably the storm Debbie and the Gulf, but generally speaking, the trend continues to be negative, minus 90. The monthly, weekly, and daily are all negative. And this indicates this market could potentially go lower. There is support at 78 for sure, but if we scope this out, let's just put a line chart on here, and let's just scope this out. Let's take a couple of indicators off the Donchian trade channels. Let's scope this out just a little bit further. And you can see this level right here on a close-only basis, right around the 77.95, has been an area of support. So we're not that far away, and maybe that's going to be a bounce. Every time we've gotten down here, the market's rallied. So whether it's going to be true this time or not remains to be seen. However, if it goes below this level, then it's going to be under a lot of pressure, in my opinion. But I think the odds would probably favor more of a bounce. So we'll let the trade triangles tell us, of course, what they want to do, as they have a very, very good track record. You can see the monthly came in here at 97.37. That's almost $20 ago, which I think is pretty remarkable. So let's go back to the markets. And the euro, which is causing everybody pain and grief in Europe. And let's go close this into a 3-month chart. And you can see it's down today. You can see the parabolic caught this very nicely. And I think this market is going to continue to go lower. My solution for the euro and the Eurozone is very simple, and I'll show it to you right now. What I think the Eurozone should do is Germany should just leave and go back to the Deutsche Mark. So that would be the DM, and let the rest of Europe fend for themselves, because besides Germany, there's really not much there. I mean, Spain, Italy, and Greece, they're not big economies compared to Germany. They're not the powerhouse that the Germans have in terms of work ethics and so forth. And this particular pattern that we're looking at right here, to me, is a negative pattern. We said if it goes on the downside, we'll probably see further continued erosion. It may be just an erosion as opposed to a strong sell-off, and it's almost like death by 1,000 cuts. So that's my solution for the Eurozone. Germany should just leave, go back to the Deutsche Mark, and leave everybody else to fend for themselves. So let's clear that screen and go back to our next market. And the next market we're going to be looking at a couple of stocks as well today that showed up on our trade triangles. and signals. And this is the Reuters Jefferies CRB index. As you can see, it's sort of much the same pattern here, flattened out for most of the month, reflecting obviously the action in gold and silver and a couple of other commodity markets, but it's sort of flattened out. Really, we are still looking for this market to go down to the 250 area, currently trading at 269.89. So let's go to our portfolio. And these are basically a couple of stocks that came in terms of our triangles. And let's just look at the first one is Cobalt International Energy. And the energy sector is down a lot today, but you can see here we had a monthly trade triangle kick in at 1979. It's currently 2023. So if you were so inclined, you could actually sell this market at a better level. And it was a signal we've had. This does not have, let me just say this. This is the first time we've had a signal in here. And look at the signal we had down here. Let me just, signal we had here was at 1154. And of course, today it was exited for 1979. So that was a nice trade longer term. We didn't get out at the top. Obviously, nobody gets out at the top. And this works out. The one concern I would have on this would be a possible Fibonacci retracement. And you can just simply draw from the highs. We've done this before to the lows. And you can see we're kind of back into that zone where it's a 61.8% retracement. So I'd be a little bit careful on that one. So let's go back to our portfolio. In the portfolio, we're looking at Bed Bath & Beyond, a very well-known name. It's a retailer. Obviously, the retail sector is getting beaten up today. And you can see here, if we scope this in just for the last 3 months, you can see there's the action today. 59.79 was the signal. It's 59.74, so it's right around the signal right now. But it would look as though this market has obviously some downside pressure. And if you put our weekly in, you can see we had a weekly come in the week before. So obviously that was the first indication that some downside pressure. But lots going on. Highly recommend you take a look at that weekend video we did on the S&P. It'll give you some idea of where we think this market can go. But again, I appreciate you stopping by, watching the video, and give us a call. Free consultation, free telephone call, nothing to lose, and it could be the turning point in your trading. So 877-219-1482. I'm Adam Hewison for Market Club. Thanks for stopping by. I'll see you tomorrow, same time, same place.